Hi, this is Dan Danford. I'm doing a series of podcasts called Money Made Easy for DadsDivorce.com. We take questions that have been submitted by viewers on the website, and I do my best to answer those questions. Today's question is fairly typical. We get a lot about consumer credit ratings. So here's the question. Why does my credit score vary by the sites and agencies I go through? Shouldn't there be a standard equation so there aren't different versions of credit scores? You know, I find all the queries about credit scores to be almost comical. And I don't mean to make a light of it, but you know, the bottom line on credit scores is when you borrow money, pay it off, and pay it off on time. If that's what you do, then your credit score will be good. Doesn't make any difference which one of the agencies uses the rating or creates the rating. Your credit scores will be high as long as you borrow money and pay it off on time. Okay? So the answer to your question of why there are different credit ratings depending on where you go is because there are different companies who do it. Basically, the credit rating business grew up over a period of time, and there are several different companies who issue credit ratings. Now, it used to be when the business was in its infancy, the basic decision that banks were using was whether or not to give you credit. That was the bottom line. It was a yes or no decision. So they would go to one of the credit rating agencies and they would pull up your information and they would look and see whether you mostly paid off the loans that you took out and if you mostly paid them off on time. And if so, they would say, yes, we'll loan you more money. Okay, and several different companies around the country started businesses like that where they collected data on all of us, basically, and then sold that data to banks or other people who were thinking about borrowing or lending us money. So each one of those separate companies kind of came up with their own way of doing that. Okay, so they all had slightly different systems to rate whether or not we were potentially good borrowers. Okay, so the difference you see between them depends on which company that you're looking at, and they all have their own ways. Now, the whole business has become more nuanced in recent times because it's no longer just an issue of whether or not you'll pay or whether or not they'll make you the loan, but in fact, they might have different interest rates they charge for different people. So people with a real high credit rating will pay a lower rate of interest than people with a lower credit rating. And it just is tied to risk. If they're going to loan money to somebody who has not paid off as regularly in the past, then they want to make more money on that loan. It all makes perfect sense. One of the interesting things are that there are about 4 major companies in the United States that collect this data and sell it. Okay? And they all have their own way of doing it. And while they're all separate companies, they have become more cooperative. So there is less difference between ratings than there used to be. And as most people know, you can request a copy of your credit ratings from these companies, and they have to give it to you. Now, the main advantage to that is that if there's a flaw in their information, then you potentially can fix it. Okay, I was in a situation in the last year where we were borrowing some money from our business, and they did credit ratings on me. And while my credit ratings are excellent, they did find a couple of things that, you know, weren't very big, but they wanted explanations. And so I basically had to provide a letter and say, this is why that happened. One of them involved taxes on a leased car. And at the end of the year, apparently, they applied a payment I sent to the car lease rather than the taxes, and then they reported that the taxes were late. Okay, well, we got it all straightened out. It wasn't a problem. But it was just a question of if I hadn't seen that, if I hadn't applied for a loan, I wouldn't have known that was a problem. Now it's taken care of. So it probably makes sense to take a look at that. But I wouldn't agonize over, you know, a discrepancy between this agency and that agency. Okay? In general, your credit picture is going to be pretty visible and pretty consistent. Okay? If you borrow money and pay it off like you're supposed to, you will have a high rating. If you have periods of time where you slip behind or haven't done very well or defaulted on loans or mortgages, then your rating isn't going to be very high. And that's going to be consistent among all 4 of them because they're all collecting information from similar sources. So bottom line on all this is, you know, the simple way to just handle all of it is just to say, hey, look, they may differ from place to place. One may rate me a little higher than another, but across the board, they're going to be very similar because they're all looking at similar information. If you're not happy with the credit rating you get, well, there's an easy way to fix that. So as you go forward, be really responsible in how you borrow and how you pay it off, because new data always replaces old data. There's old data falling off your report as new data is going on. So the way to raise your credit scores going forward is just make payments on time when you're supposed to. So hope that helps. You can get a lot more information on the internet. The Fair Credit Reporting Act was passed by Congress several years ago. It's the law that allows you to get copies of your credit ratings if you want. It's the rules that allow you to know what's going on when credit decisions are made on your behalf. If you think something's unfair or you want to look at your credit report, that's what you need to take a look at in order to get them to give you the information you want. But this is all readily available on the internet. It's easy to work with. Shouldn't be any major discrepancies. I hope that sheds some light on the topic. As always, I look forward to talking to you again next week. Thanks.